Evening, everybody. It's 6:17, and the futures are open on this Sunday night, the 12th. And so I thought I'd give you a head start on tomorrow's action. So this is, as I said, number 1318, and it's your Sunday night look at the futures. So let's go to the stocks first, because this is my highest reliability kind of trade since we broke my 4057 number on Thursday. We've continued down, last night closing on the low, and this tonight moving through it. Now, what I want to point out, and it's already posted from this afternoon on our Discord page, the idea that what we're seeing here in the S&P is a series of measured moves. So we made the high and we came down here to 4,200. That was a 600-point move. We came right back up into that same area around 4,600, and that turned us back down. So we went down 600, we came back up. The absolute peak was about half that, so about 380. We came back down, rallied back up, same general area. Let's just call this 4,600, and we fell back down here to 3,800. What we've done here is we've had another move up to a prior breakdown, and it looks like we're going to break again. This close 4 weeks ago was 38.99. This close Friday was 38.99. So you don't have to be a genius to see that if we were to do nothing but close right where we're open, we would have a new lower close. What I believe is going to happen there after this decline of roughly 400, a 200-point rally right into that 42 to 4,300 that I was talking about. If we break here, I'm going to say that we're going to have another measured move, and that would be from the lows here, 39 up to 42. That's 300. A break here will take us right down to this 50% retracement and in the general area of the rising 200-week moving average. So I think that's pretty much in the cards. Sorry I didn't get you short. I was too busy watching other things. And I really don't like to take a position on the short side of the market on a Friday when we've been down for the week. The premiums were just way too high. So right now the S&P futures are down 29, NASDAQ down 146, Dow down 134, and the Russell is down another 14. The point here is that the dollar is acting incredibly strongly. The bonds are down 7/30 seconds now. That's about a quarter of a point. But the rise in interest rates for the last couple of days has put a bid under the U.S. dollar. And we're getting back up into this high closing area. If you look at this one on a daily basis, you'll see we rode this 50-day moving average, hit it 3 times, and then we turned higher. What is interesting here is not that the dollar is so much higher, but the fact that the gold on Friday was down hard on the CPI and the rise in rates. In fact, it was down as low as 1826, and then it turned on a dime and closed on the high of the day in the face of both higher interest rates and a higher US dollar. Very unusual. Looks like we're trying to break out here. I'd be surprised if we were able to break above this 19.5, 19.10 area, but stranger things have happened. As I mentioned in tonight's letter also, the open interest has fallen off in the gold, and it looks like there are a bunch of people taking delivery. And when the open interest is down, that means that the professionals have control of the market, and they generally like the upside. Another couple of quick looks around. So we have oil down $1.80. We have heating oil down about a nickel. Gasoline down about a nickel. Nat gas down about a nickel. So we'll have to see if that carries over. What is definitely carrying over is the weakness in the cryptos. Here we go. The Bitcoin, which had a very narrow week last week, has fallen out of that area. This low in here is 25,350. Right now we are 27,235, but we're down 1,600. A look at the weekly here will give you a little bit better idea of how quiet it's been for the last 4 weeks, and it looks like it wants to make another low. Now, there is also, it's kind of back in the distance, but there is a gap right here to the upside. Let's open this up a little further. There is this gap. Actually, let me go to a different Bitcoin that goes back further, which is the full size contract, not the mini. And you can see that we did have this gap. I mentioned it last week. I mentioned it again today. It's between 24,635 and 26,080. Looks like we may want to close that, and it also looks like, the decline has slowed a bit, so the 5-week is looking a little bit better, but really the next area of any real support is this 22,360, which is the rising 200-week moving average. It's also getting awfully close to the 78.6% Fibonacci retracement. So that's what we have tonight. I will keep my eyes open, and of course I'll be back first thing in the morning with a pre-opening comment.